It's quite clear this is an organization which is growing. Harambee has got market for its loans. Our customers are largely civil servants. Anybody who wants to invest, put your money. The future of Harambee is bright. And in about 4 to 7 years, you'll have recouped your total investment at a rate of 15%. And your investment still remains to earn you income perpetually. Yes, we've looked at Harambee as a business, and it's very clear Harambee is very viable, it's very profitable. And when we analyze our financial statement, one of the areas where we have denied our members good returns is dependency on external funding. Occasionally we run short of cash flow, and then we go out there. But it is too expensive. Like now, banks are charging as high as 20%, while on our side, we do lend at 12%. So for that reason, and the need to comply with a number of prudential ratios, we are going to give opportunity to our membership. We mobilize these funds from within, so we don't want to borrow from outside. So why do we want to, or how do we want to do it? Just like a member can invest in a building to earn rent, or invest in a matatu to earn income out of it, we are giving members opportunity to invest in equity of Harambee Sacco, that is the share capital. Now this is voluntary. There is the statutory, the minimum statutory, which at Harambee is 30,000. That one there is no problem, members have complied. But now we are saying on top of the 30,000, invest, and you will earn an income of at least 15%, which we have calculated we are able to finance, and we are able to sustain it for the next 5 years. And we are saying if just about 30,000 members participated, we should be able to mobilize over 4 billion shillings. With 4 billion shillings, we are guaranteed adequate cash flow, and we will even be able to give much longer loans like some commercial banks are doing. In that way, we will be more value to our members. We have a total of 79,000 members. Definitely not all of them will take up. So on our side, we are making available 40 million shares. Each share at Harambee is 100 shillings. And we want to make it available initially for any member, at least 50,000 shillings worth of shares. But we also want to put it open. If a member wants to buy more, they are allowed, because the regulatory limit is 1/5. 1/5 is quite a large number when you talk over Harambee share capital. So we don't foresee any member going up to that limit. So, and in our estimation, we are estimating about 30,000 members will participate. And with 30,000 members, we are targeting a total of 4 billion or thereabout. We are sure in a period of 2 years, this is 2024, 2025, we should be able to mobilize that. And borrowing from external sources will be history at Harambee Sacco. We started talking about this about 2 weeks ago when we had the ADM. And we were waiting for a letter of no objection from the regulator, which we have since got. So now we are at liberty to make noise. But in between, we've already mobilized 6 million shillings. The response is very, very good. We have also made it very easy. We do it on phone, and it's fun also. So we are quite optimistic we should be able to meet our target, because we have not even launched it yet. But already there is response from the few groups that we have met on roundtable, the top savers breakfast, the delegates meetings. So we will be reaching out for more. When you look at the performance of Harambee in the last 2, 3, 4 years, it's quite clear this is an organization which is growing. And then also, if you look at the loan book, the way it has been growing, we have market. Harambee has got market for its loans. And our customers are largely civil servants. There is a secret there. It means salary is almost guaranteed. Why is that important to us? It means non-default is much lower than SACCOs which are dealing with members who are not in common bonds like government ministries. So the rate of loss of non-performing loans at Harambee, actually last year we were standing at 1.2%, way below 5%, which is the industry standard. So for that reason, I would encourage anybody who wants to invest, put your money. The future of Harambee is bright. And in about 4 to 7 years, you'll have recouped your total investment at a rate of 15%, and your investment still remains to earn you income perpetually. When we were starting this journey in 2019, the image of Harambee was very bad. Today, Harambee is a brand that we want to identify with internally and externally. In terms of performance, we have nearly doubled the size of the SACCO. In end of 2018, total assets of the SACCO was at 25 billion. Today, we are at 39 billion. The loan book at that time was only 15 billion. Today, we are at 30 billion, twice what we were in 2018. The deposits has also grown by over 6 billion. In terms of return on investment, we were paying dividend of 4% end of 2018. End of last year, we paid 12%, so from 4% to 12%. Interest on deposit, we were paying 5%. End of last year, we paid 8.5%. And even the membership has been going down, but we have now contained it. The rate at which it's going down is now much lower. So the trend was we were losing about over 1,000 every year. This time we are at a level, in the last 2 years, we have been gaining positive net on membership. But in between also, we've done a lot on training of delegates, training of staff, training of board, and even the membership. So we are almost seeing a culture change, a shift in culture, where now we are more of a formal institution than what we were. In terms of service delivery, when I came, we used to queue loans. So a loan would take up to 30 days to be processed. Today, it is hours, irrespective of the amount. Provided you qualify, you apply, you submit, you will get it within the same day. And also in between, what we have done is we have moved most of our services to the digital platform. By 2019, all loan applications were physical. 2021, we moved all loan services into mobile. Now, even meetings, board meetings, we used to do physical meetings in the boardroom. We have since moved to digital, so it doesn't matter where the board member is. Meetings can go on, and we are able to execute SACCO activities in a much faster way. The same even with the senior management. We don't have to be physically present in one common place for us to make decisions. We simply log on, go on with the contribution, and the decision is made in minutes, as opposed to where we have to give a notice, schedule a meeting, we wait for everybody. That has since changed. The other bit which we have also done in the last 5 years is we used to have our branches in dingy areas. We have since moved to the main streets. So like if you go to Mombasa, you will find Harambee in Nkrumah Road. Nkrumah Road is like the main commercial street in Mombasa town. When you go to Nakuru, there is Kenyatta Avenue. That is the main commercial street in Nakuru. And that is where now you find Harambee branch. And you go to Kisumu, the main commercial street is Oginga Odinga Street. That is where you now find a branch of our Kisumu branch. And when you go to Eldoret, we are in one of the most modern buildings. the Moi University Pension Plaza. That's where you find Harambee branch. So very visible. So in terms of visibility, presence out there, that we have since improved across the country. And this year we are going to do another one in Nanyuki. We have got a small satellite office. So that is going to take place. The other thing that has taken place over the last, say, 4, 5, 6 years is engagement with the stakeholders. So like right now we are going on with an activity called Top Savers Breakfast. We started it 2 years ago, where we look at those who have saved $1 million and above. And we meet them to say thank you and also to give them a report of how their money is being utilized, expectation that they should have for the year. And then also we get feedback from them. And that has been very, very useful. In fact, out of that engagement, we have even come to develop some products. Now, the other activity that has come out very, very positively is a relationship with stakeholders like our regulator. It was nearly hostile when we were starting in 2018. Currently, we have got very smooth relations with the regulator, Sasra, the ministry, commissioner's office, the PS office, and even at county director. And we keep on engaging with them in a very, very positive way. That has worked fairly well for us. We've also onboarded quite a number of new staff. When we were starting in 2019, average age of staff at Harambee was 48. That is a little bit too advanced for a financial institution. We have since reduced it to 36. So average age of Harambee Sacco staff currently is 36. Of course, we could do better, and hopefully we will bring much more dynamic and agile staff with ICT skills. So that is still ongoing, and we will be there. We will be there. 2023 is a culmination of a build-up of what started in 2019, 2020, 2021. What has happened is that the SACCO members now have confidence in the SACCO. And now specifically in 2023, we increased our non-funded income, transactional income, in a big way to 36%. How did this happen? We've been imploring our members to pass their salaries through Harambee. And we were starting with as little as 2,000 salary accounts in the year 2019. This has since grown to over 16,000 by 2023. And it is easy, just the salary passes. We charge a little fees here and there on processing, withdrawal, ATM, the mobile channels, and that our income went up through those channels by 36%. And also I think we had more members transferring their loans to the SACCO, so that our loan book grew significantly in the year 2023. Like I was mentioning to you, we were closing the year with a loan book of 29 billion Kenya shillings. So we are starting at a very, very good base. That led to the good performance. And also we were very keen on the expenditure side last year. So we've been reducing our expenditure ratio gradually. We are currently at below 30%, that is on operations. And we will continue doing the same till probably we come to around 25% of our total revenue. Yes, revenue leakage was a big problem. And this we have largely sorted it twofold. One, we've enhanced our systems. So ICT services are now on the higher side. Like even most loans are now applied for digital platform. Minimized physical contact where there is possibility of individuals colluding. The other bit is we've enhanced quite a bit on monitoring of what is going on in this organization. In between, we have separated audit department from risk and compliance. So risk and compliance is very clear on what is likely to happen and is on 24 hours monitoring the same. Audit goes on to check what is happening or what has happened. In that way, we've been able to contain and minimize chances of individuals dipping their hands into societies' monies. And we'll continue doing the same. We are expanding audit department, we are expanding risk department, and we have also deployed, including some very sophisticated software, also to be checking and monitoring transactions as they occur, and we get signals. One that is quite notable, not very common in the market, is we have got an IDEA. There is a software called IDEA software for auditing. So it continuously monitoring transactions as they occur on our mobile platform, the ATM channels, and even the physical withdrawals, interactions with our branches. In that way, we've been able to be on top of the leakages or the avenues through which SACCO used to lose money. This we are monitoring, and we are very keen, and we want to still enhance it further. The other bit probably I wanted to mention, and we've been very lucky in the last 3 or so years, we've not had a cyber attack. Through that, an organization can lose resources in a very big way in a very short time. We've employed a number of methods. So like, for example, we have engaged a digital watchman. Specifically, we've engaged Safaricom to be just overseeing our cyberspace. We must also thank our service provider, where we've ensured that constantly there is check on that the system is able to work for us. And every year also, we do a penetration test twice. The regulator requires at least once every 2 years, but in our case, we do it twice every year, so that we are just on top of our systems, and we are just in a position to tell our areas of vulnerability, which we respond to in a good time. Yes, it is true. The SACCO has got quite a number of idle assets, especially in the form of land. You find we have land in Mombasa, Kisumu, Siaya, Nanyuki, Murang'a. Now, we've not done very well with regards to the disposal. In the last few years, the economy has not been performing very well, and the prices, these are prime lands at the moment. So you find the pricing is a little bit on the higher side. Like in Mombasa, we're in Nyali, and Nyali is quite a prime area. So we've not gotten buyer to meet our request or our valuation price. Kisumu, we have not been very aggressive to sell, but of course going forward we will be. This year we are going to sell Nanyuki and most likely Murang'a as well. Property market has gone down. What it was in early 20s is not the case at the moment. The buyers are much fewer. And also, if you look at, for example, even in the papers, the property is being auctioned too much, and then the auctioning price is usually not market price. So the buyers, while they're very few, they are spoiled of choices. So the offers we've been getting have been too low. $2024 looks promising, especially on two grounds. First is our starting base. We are closing 2023 with a good loan book balance of 29 billion. So that starts generating income for us in the year 2024. Then if you look at the macro economic environment, where now banks are charging much higher rates, that is an advantage to Harambee Sacco and even other SACCOs. So it means more members will be coming to patronize Harambee Sacco loans, as opposed to going to microfinance and bank loans. So that's going to be our advantage. And if you got my message about the shares drive, where we are saying we want to reduce our cost of capital, and once that is reduced, it means we transfer that benefit to the member in terms of return on investment. So that gives us that opportunity and optimism to say 2024 should be a much better year than 2023 and before. Our target is quite high. We want to work towards a dividend of 15% and interest of deposits of at least 9.5%. Hopefully 2025, 2026, both interest on deposits and dividend, we should be on double digit. Last year we grew by 14%. We want to go above that, so at least rise by 15%. So in terms of volumes, we were closing last year at 5.6 billion. That is our turnover. Our target for this year is 6.5 billion. And that is a growth of over 10%. So that's our target for 2024.